feel free to post in the chat box and we will go from there. So I see a question about CE credits. Yes, this presentation is CE accredited. In order to get your CE credit, things. A, if you're in this market, how you can find areas to prospect, how you can spot certain risks with your clients, how you can propose different solutions very differently. So we're going to show you a different 3-step framework, how to have your conversations, how to guide those conversations, how to talk to different business owners, what your first entry point is if you're trying to get into this market. And again, if you've used a lot of Foresters in the past, we've been primarily a family market company. If you're in the business owner market or trying to get in there, we feel this presentation is going to be very, very valuable to help you grow. We're going to talk about different ways to enter this market, how to grow with key person insurance, and really how different conversations could unlock sales opportunities for you. So that's really what we want you to take away from this conversation today. So again, we're working in the Canadian family business market. So what are the realities? What are the things we have to think about? What are the points of conversation? So again, whether you're in this market already or you're trying to get in, a lot of advisors are already working with business owners or family businesses. Sometimes you don't even realize. And so there are so many small businesses across the country. This doesn't have to be businesses. If you're in the group insurance market, these might be clients you've talked already about. But so many people are trying to focus on building their business, wealth creation, how to maximize their dollar. But while all this is happening, a lot of people don't take the time to work on risk planning, planning for the future, planning for a lot of the stuff that we're doing every day. Because they're so busy focusing on what's next in the business. How do we grow? Who are we hiring? How do we train this person? And we see it all the time with different clients. Some people who are like professionals and doctors and dentists, not as much business owners, but they're spending so much time trying to grow and learn. They don't take that time to step back. And what are the main reasons? One, they're too busy. We just talked about that. There's too many things going on in their business. They don't really have the time to look at this big picture view. And two, sometimes they're skeptical. They think they have accountants who know how to do all this. They don't think they need to. They think they're healthy. A lot of business owners are constantly looking at what's next. But a lot of them, they don't take the time they need because they're skeptical. And this is where we're going to arm you with solutions of how to get through that. Number two, we talked about it. Anyone who has clients like this or knows someone in this market, they know a lot of these kinds of clients, they're constantly solving problems. They're constantly putting out fires, sort of like what we all do every day. But when you're constantly doing that, you're constantly looking at what's the next thing I need to deal with. That's where the risk planning and the business planning, it does get lost in a lot of these Canadian family businesses. And what leads to that all, which is a great opportunity and why we're here today, most business owners honestly are underinsured, whether it's on the critical illness side, especially on the life side. And so what we want you to take away today, and which is why our products at Foresters, especially with our Advantage Max product, when you have the right conversation and you get in there early, you can become the really important advisor. And so a lot of business owners, whether it's a small business owner, an incorporated professional, anything of that nature, they become very reliant on their teams, their accountants, their lawyer. And that's where you can come in. We have resources now at Foresters that can help talk to other accountants. We have people that can help set you up for these kinds of clients where just putting the right people in the room, this can open up all kinds of different sales. And this is where us at Foresters, we have the resources to help support you. And frankly, this is a market that we've seen a lot of growth in the last year since we got into this new product, where we're way more set up to help you in this business owner market. So again, this is a big area of Canada. Everyone always talks about wanting to work with business owners, but they are out there. 63% of Canadian businesses are family-owned. So once you get in with the right people, a lot of these businesses stay within the family. These are family-owned businesses, and at Foresters, that's really, really important to us. That's a big basis of our business. So really, a lot of time, you're always chasing the next client or you're trying to find the next sale, but often do you think, like, okay, who are my top 20 clients? How many of them are reliant on business income? It's a basic question, but it's something that we recommend constantly doing. Like, who are those top clients? Are they in the business owner market? Do they know someone who's in the business market? Can we help them? It's really, really important. So there's all kinds of different things, but some of the questions that we can ask them and what this means for their businesses is things that they have probably done already that they might not have thought the big picture about. Are they relying on loans for growth? Is there a more efficient way to do that? Are they taking on too much debt? Is the debt personally guaranteed? Is it corporately guaranteed? What happens if one or two of the people of the business get sick or pass away unexpectedly? Do they have a buy-sell plan? All kinds of risk planning. We can solve a lot of these problems. And so I think a big part of working with business owners is figuring out where their pain points are. Anyone who's worked in this space or has given us feedback or when I've sold in the past, in the business community, it's really important to figure out where the pain points are. The number one pain point for a lot of business owners, honestly, is taxes. If you want to get a business owner fired up, bring up taxes, how much they're paying in taxes. What are they doing to save in taxes? I guarantee you that's going to bring up a pain point for every one of your prospects in this market or every one of your clients. And the great part about us in the insurance space, especially at Foresters with our line of product, is we can help solve those problems. We can be a huge help on the tax saving side. We can create more efficient tax planning through our PAR product. We can talk about different ways they can structure their loans better. We have a really good solution for the number one pain point in this market, taxes. And there might be other things. Maybe they don't have a buy-sell. Maybe they don't trust one of their partners' families. By asking the right questions, you're going to figure out what the pain points are. And the good thing is we can arm you with solutions to solve these problems. That's what's so exciting about this market, working with us at Foresters and our product line. So you're seeing out where their pain points are. There are conversations we're going to give you today that's going to lead to sales opportunities. So, okay, let's say you're already working in these markets. It's really about starting the right conversation. So whether you want to get in here, whether you have prospects already, it's all about finding out, okay, what are their pain points? So does your client have staff, equipment? What are they paying in a lease? How are they paying themselves out of their corporation? Is it salary, dividends? How much is their family reliant? All kinds of different things. Sometimes they're not incorporated yet by their accountants. And this is where it's really important to understand. So when someone's incorporated, that means they're paid directly into their corporation, and to get money out, they have to pay themselves some salary or dividends, which is a tax savings vehicle. If they're paid personally, they're taxed at source. So a lot of accountants, once they hit a certain income level, they're going to want them to set up a corporation, but this is not required to a lot of what we're talking about today. You can run a business very well through a personal or professional corporation, or you can run it different ways. So when they are in that situation, when they are incorporated, we can offer them a ton of great solutions, not only to take advantage of the cash value, to transfer money to their families. There are so many different things we can do. But if they're formal, if they're not formally incorporated, that doesn't mean they don't have risks in terms of their debts, how they're paying themselves, things of that nature. Do they have a buy-sell? Obviously, it's best when they are incorporated because the tax savings we can do through our PAR products are second to none. But again, it's all about asking that question. What are those pain points? How can we help solve a problem? People hear the word insurance and they think of car insurance or home insurance. When it comes to the business owner market, it's a totally different. This is not always about in case the worst happening. This is about setting up a plan to solve a problem. And that's what we're trying to do, whether it's taxes, whether it's making them more efficient, whether it's transferring their wealth in their business. It can be anything. And sometimes it is buy, sell. It might be something simple. But we can offer them solutions through our products that's very strong in this market. So this is the thing. Business owners are going to see problems. These are pain points. But every one of their pain points, we need to see as opportunities. If we're paying too much in taxes, our team, working with your wholesalers, working with our tax people, we've hired Jeff Jones. We're running our tax and estate planning across the country. When you go in there and you have a solution for that, we're not going there to pitch them a solution or pitch them a product. We're trying to solve the problems we talked about. What are those pain points? Is it taxes? Is it buy-sell? Is it family? This is where we want to become their trusted advisors. We don't want to become looked at as a salesman. We're not going in there to sell them a product. We're going in there to work with them and solve a problem for them. It's a totally different mindset. So they don't want a sales pitch. Business owners, they're getting pitched all the time on a million things. They want you to become a trusted advisor. Here's your issue, here's your risk, or here's your pain point, and here's how we can solve it. And again, every business, no matter the market they're in, there's going to be some level of pain points. We're having trouble recruiting. We're having trouble with taxes. We're paying too much tax with our investments. Anything. Every one of your clients is going to be different. And again, the best part about this is you don't have to do everything yourself. You have resources. You have your wholesalers. We can go through this with you. You have people, your MGA partners. They have, a lot of them will have tax and estate planners or large case connections, but it doesn't always have to be a large case. What you can do is you can identify those risks and build a solution to open up that door for you. And this is what we want to do. Once you help solve a business owner a problem, they're going to look at you totally different. When you sell a family member term insurance, I'll be honest, they're not going to look at you in that same manner as when you can help a business owner, especially with a pain point of them, solve a problem. This is where, and that's where you have different products, and we'll show you why Advantage Max is so opportunistic for these business owners. So this is where we have to frame this differently. We're not trying to sell them on something. We're trying to mitigate their risk. We're trying to solve a pain point. So for those who have used Foresters, this is our market that we can be very confident in now. We launched a new product which is really designed for that business owner market. We launched a new product last year, Advantage Max. A really big picture about Foresters, businesses want to work with companies that are not coming in and out of the market. Foresters has been in the business of insurance for 150 years. They're very strong with Canadians. We're going to talk about our member benefits that can also benefit these business owner, but we have a lot of money liquid. We'll talk about our LICAT ratio. We have a very strong sales presence across the country. This is where we can help you no matter what province you are in. And we have a lot of our profits are being directed towards members. So if you want to scan this QR code, you can see more about this company. But really, Foresters, very strong backbone, very strong financial situation across the country. We have almost as much cash on hand, which is good for claims, which is good for our member benefits. This is why Foresters is really strong in this market. These business owners want reliable, trustworthy, and then when you can help them with business, especially with the member benefits, we can really, really offer good solutions for you. So anyone who wants to work with Foresters in this market, we're far more competitive now in this market with the launch of Advantage Max last year. Our cash value in that product, year 10 plus, is top of the industry. We're also paying 10 to 20% higher FYC. So for the same dollar put in, you're going to make more money. When we launched Advantage Max, we also launched a new online application called AppPro. Super intuitive, easy to use, really, really effective. Pretty big upgrade on what we've been using before. Advantage Max is now on AppPro. Your team across the country can help you get set up if you've never used it before. We have a sales team across the country, really, really well set up. You have the support, and now we have a tax and estate planning team. We've made some big changes on the underwriting side. We hired a new head underwriter, and our service levels have really, really improved. So we're seeing a lot of growth at Foresters, which is really valuable to get into this market. So again, anyone who's ever seen MePercent or any of your wholesalers, what province you're in, you're going to hear about our member benefits. So anyone who buys a product through you at Foresters, so this is for your clients, this is not for you, becomes a member of Foresters. So what does that mean? They get access to 11 different member benefits built in their policy free of charge. So if you're getting into the business owner market, this is a massive value add. I can't emphasize this enough. If they're putting money out of their professional corporation or out of their personal bank accounts to pay for this product to help manage their risk, they're going to want something out of it more than just the savings and taxes. Well, we have 11 things for free for them. No matter what kind of things they want to get involved in, there's 11 different things built in. So these are broken up into 4 different buckets. And again, anyone who's heard me present or been on these presentations before, you should be very familiar. So there's a QR code to go through our amazing member benefits. They're built into the policy. So they're broken up into 4 buckets. community grants, scholarships, community and volunteer opportunities, or well-being. Now, I wouldn't recommend going into these meetings and getting them excited and showing them all 11 member benefits. That's not the best way to win over a client, especially people who don't have a lot of time. Again, we said they're too busy. Knowing your prospects or your clients, find one or two of these you really like. And it might be one different one for each one, but it's a great way to just show the value add. Say they have kids who are near the post-secondary school age. We give out scholarships every year for post-secondary school. Now, again, we're not going to tell you to go around and promise these scholarships, but if you can help one client, especially in the business owner market, get their kid a scholarship to post-secondary school, they're going to tell everyone about you. You're going to get in that market. They're going to refer you to other people. It's not like when you sell someone maybe just a basic term insurance. A lot of people might be a little uncomfortable talking about that. If you can help somebody save money for a scholarship, they are going to tell so these member benefits aren't just value add for the client. It is a referral game changer for you. So other things we have community grants. So a lot of business owners want to make a difference in their community. It's a great way to spread the word. It's a great power of social media. It's a great way to grow their business, but just make a difference. We have things like our Foresters Care Grant. Every year we give out $400, 2 grants at $200 a year to help make a difference in the community. So we have some people who go to Costco, spend $200, and they'll go give out food to schools that can't afford lunch. They do this twice a year. They're reimbursed through their Foresters Care benefit. And again, it's a great way to make a difference in the community. You might be working with a local sports team. You might be working with your place of worship. All kinds of different community grants. And then there's different opportunities to actually run community events in the community. So there's that. We have different grants. And again, scan the QR code, learn about these. We also have well-being benefits. So one of the things we see a lot of success in is what's called our LawSure benefit, which is anyone who has a policy, they can buy a will for their family if they're the insured on the policy, and they get access to a will for free. So about 55% of Canadians don't have wills in Canada right now. It's kind of alarming. But why do you think that is? I'd say the reason for that is because A, people don't want to think about death, like we talked about before. People want to push this off. And B, a lot of people think it's too expensive or nothing's going to happen to them. So I was at a recent event in London, and I went to an estate office. I was going to present, and there was a estate lawyer right beside. I popped in. I said, what do you guys charge for a will? I'm just curious. For them, it was about $1,200. I know a former estate lawyer in Toronto. He started his own actually will service online. He charges about $600 to do. So not only can you get the coverage to help solve a problem for them, you can save them anywhere from $600 to $1,200 by getting them a will. And that's just one of the 11 benefits. So again, I'd say wills, scholarships, Foresters Care, we're giving out $400 a year to use on their clients. And again, power of social media. It's such a good way for you to help grow your business and for your clients in that business owner space. So again, these are all built in for free when they buy a policy with you. These are not for you. Sometimes people will buy policies on themselves just to get access to these. So the member benefits are a huge sales opportunity for you or for your clients and for you to grow your business. So again, this is where, again, this all ties together. A lot of business owners, they want to make a difference in their community. They want their name out there. They deal with other business owners. There's all kinds of sponsorship opportunities, and this is where our member benefits can support that almost perfectly. It's seamless, and this is where you can make a difference. The people who are selling maybe some other carriers, they can show them some numbers, but they can't offer this, the chance to make a difference in their community for their member benefits for free. And we have a really good product that can help solve those issues as well. So again, you might see people who are sponsoring sports teams, social clubs, different fundraisers. They can use their member benefits to help. And again, we see this all the time. When businesses don't work out, a lot of communities are reliant on these businesses to help support them. Like if you have children and you're seeing these local sports teams or these leagues, this is where the money comes from. So if you can help protect these businesses and make a difference in their community, again, it's not just helping the business as much as we love doing that. You're growing your business through these member benefits. And this is where Foresters can just unlock different parts of your business. It's a huge opportunity. And again, like the slide says, you're not just selling insurance anymore when you work on these business market cases. You are doing a job to grow and maintain your community. Huge opportunity. So again, this is where that question comes down. This is almost your sales playbook here. How do advisors position themselves early? How do you become that trusted advisor? How do you get into this market? How do you stay in this market? This is what we want you to talk about today. So again, and this is where we're not telling you to go and reinvent the wheel. It's a lot of the times it's a simple conversation that you can all just start with going forward. You don't need to be a business planning expert. One of the things we talk about all the time is you have resources both at your MGA and at your carrier level. But what you need is a consistent process just to help guide business owners, to help them solve the problems. And this is where it sounds complicated, but once you're in that room, you don't need to be an expert. You don't need to sell them a product. You need to help solve a problem for them, and you can show them what you can do for them. So again, we're not reinventing the wheel here. Let's start with the basics. Step one. This is what we've talked about multiple times already. Identify the risk. What is the problem? What is their pain point? Well, that's what we're doing in these discovery meetings. We're figuring out, okay, are there key people in the insurance? What would happen if they lost one of those? What are the areas they don't have really good planning in? Helping the owner see what their risk is, number one, and it's not always by fear, but sometimes a lot of it is figuring out what is their pain point. Is it, what keeps them up at night? Is it someone, what would happen to me if I got sick, or what would happen to one of my key employees, or we're paying too much in taxes? What is the risk? And then it's about making it real for them. And that's where we can come down and show them a lot of the numbers, or we can have conversations with them. What would happen if your cash flow got disrupted? What would happen if something happened with one of your loans or your lenders or your partners? What would happen if you got sick and there were forced decisions, or say you have a company of 3 people and one of your partners passes away unexpectedly and then their spouse comes into the business and takes their shares? Is that something that keeps someone up at night? Every one of your prospects, every one of your clients, they're going to have different risks. They're going to have different needs. And again, I always say this, if you can bring up taxes with owners and you see how they react, it's going to be a very telling thing. But again, this is where our discoveries are important. But again, we're not trying to sell them on the insurance. We're not going in there. We're going in there to see what their pain points are. How do we identify the problems? And this is where we can solve it. And this is the fun part of insurance planning. It's not you telling them, okay, here's your premium for home insurance. This is what it costs. This is us building something together and solving a problem. And if they have money in their corporation, this becomes a very fun sale. But again, step 3, how we can help them. And a lot of people, they don't understand life insurance. They only know insurance as a risk mitigation factor. A lot of people only know term insurance. They hear life insurance, sometimes they want to walk away. This is where it's important to show them you're using it to solve a problem. So this is where I keep coming back to taxes. If you can help a business owner show them how to save them and get them more efficient with getting money out of their corporation, or saving them in corporate taxes every year, if they're investing a lot of money, they're paying annual corporate taxes, or preserving control, or helping set up, or helping protect their business. We're not saying, okay, here's a product you need. It's a totally different conversation. So again, it all comes back to that step at the top. What is their pain point? And then once we get to that, figure it out, we can then show them, and this is where we have to build the right presentation or build the right understanding, or it's leveraging your wholesaler or your MGA or your tax partners here at Foresters. How can we solve this problem? At the end of the day, that's what we're trying to do. So again, the whole thing comes down to we're not pushing product. We're working with these business people to solve a problem. And life insurance for a lot of these business owners can be a super powerful tool. If it's a buy-sell, that's it. If it's a tax issue, we can be amazing. If it's a corporation issue, we have all kinds of different tools, plus the member benefits we talked about. So this is where these first conversations are super important, because this is where you kind of set the tone for what you're trying to do here. We're not coming in, and again, people see salesmen, and I used to be a broker myself. People see salesmen very differently. So that sometimes they can sniff if you're trying to sell them something. If you're going in to help them, or you're going in to solve a problem, and a lot of people who sell group insurance are very familiar with this mentality. This is very understanding. And this is where us at Foresters, we can offer them something And when you sell Foresters through these member benefits and our products, that a lot of your competitors in the market might not be able to offer. So that first conversation is key. Again, you want to set the tone. You're trying to figure out what the problems are that they're feeling. And again, this is where I come down to everything. If you go in there and you pitch them something, they're going to see you as a salesman. If you go in there and figure out what their pain point is, and that's just with a respectful conversation, you're trying to build trust, you're trying to build credibility, you're showing yourself as a problem solver, and you're opening the door to a new conversation. And this is where we have to go. Step 1, step 2, step 3. We're not jumping to step 3 in the first meeting, or else we're probably not going to get a second meeting. And this is where it's important. The first meeting is a discovery meeting. Figure out what the problem is, and then you have people on your side, whether it's through your MGA or through Foresters Wholesalers and the sales team, to help support you. And this is where it's important. Sometimes, I can tell you, just working since we launched Advantage Max last year, sometimes advisors will go into the meetings, they'll come across, they'll figure out, okay, we got to get them a term for this, or they got to get them a product for this. Sometimes they'll leave the big problem on the table. And I've worked with an advisor in Ontario, and I've said, well, did you ask about this? Like, do you realize what's in front of you? And this is where, again, you don't have to be a business planning expert and know the ins and outs. You just have to get in the room, and you have to ask the right questions. If you figure out where there's a problem is, we have the resources to help solve it. That's what it is at the end of the day. So here's the question. I'm sure everyone's wondering, if you're not in this market, okay, you've told me some basics, but what actually makes a strong door opener? Like, how do you get in? Again, I think the key is, and what we really want you to take away is, we don't want you in the business owner market to be looked at as a salesman, because they're being pitched stuff all the time. They see you as, especially in insurance, we want to look at creating momentum through solving problems. So here are the 3 things based on our team and based on our experience we think is important. Again, I'm going to keep hammering on this. I feel like a broken record at this point, but we want to figure out what is the thing that keeps them up at night. Like, what are important to their business? What is bothering them? Taxes, buy-sell potential problems. Every business is going to have if you find a business owner that doesn't have some sort of pain point, I would like to meet them, because I have not come across that. 2, I think the first meeting is we don't want to overly complex them. I don't even like using the word premium. So when we're talking about this, I use the word deposit or things like that to not change their mindset where they feel like they're being pitched something. Don't use jargon. We're not talking about CDA in the first meeting. We can show them that later. But again, we want to show them that we're here to help them. We're here to grow their problem. And then scalability. Again, this is important. This is where, by kind of coming in with the right attitude, the right mentality, if you ask the right questions, it's going to lead to bigger conversations later. So this is where it's really, really important. So let's start with the discussion. We want to give you some examples. It's up to you. You can obviously, if you have a good system, great. If you want to try what we're going to offer you, that's great. But again, first meeting. I'm not here to talk about insurance today. I want to understand your business if something interrupts your plan. What I like to say is I want to know what the pain points are, like what keeps you up at night. What are the things that are really important to you? And you can do that by asking different questions. You can ask that by different ways, but I hope you understand what we're getting at here. I want to understand your business and what your pain points are. Again, point 2 is huge. In that first meeting, in that discovery, you're not there to sell insurance. You're there to make them comfort. You're there to take that wall down. Help a business owner understand where they're vulnerable and show them that there may be a solution for them. You're not going in there, okay, I want to sell this guy part. He's got a big business. It's great, and maybe that's your long-term goal. But that's not a good way to have a sustainable process. You want to go in there, and I used to work with someone who was very successful with lawyers and doctors and dentists. You want to go in there and understand what matters to them. Is it wealth creation? Is it passing wealth to their family? Is it other families in the business? Again, and this is where the third point is key. I do a juvenile presentation. I talk about this angle a lot, but it's even more important in the business market. We're not going in there to talk about death or insurance or what happens if this person dies or whatever. We're trying to focus on being very basic, having a real conversation with them, and just learning about these people. Because when they hear death and insurance, again, they're going to see you as a salesman. And that's where it's really, really important. So it's really important to start small, don't overdo it. But again, you're thinking long term. So you want to understand some very basic business points, and again, some easy ways to get in. Do they have business loan protection? What would happen if they aren't able to work and pay off their debts? A lot of business owners have some sort of loan. And key person. So do they have one employee in the family business who's, if they got sick or they passed away, how are they going to run their business? But this is where we can all of a sudden move to other things. So it might be a basic CI policy. It might be a life insurance policy. But when we're going to move to bigger insurance conversations, what we're trying to figure out is things we've talked about throughout right now. Okay, if they have a family member they don't want to get into the business, or they want to make sure the shares are properly transferred if somebody dies or gets sick, buy, sell. Very common business conversation. Opens up some pretty big opportunities there because they're all going to need to buy, sells on each other. So let's say I have a business with 3 partners, and sometimes I will buy business on one of my partners that if they passed away, I'll buy insurance on one of their partners. Our insurance would pay out the family and the shares would come back to us. Things of that nature. Tax-efficient wealth accumulation. A lot of business owners, especially the incorporated ones, are spending money on corporate investments. And corporate investments are great for growth, but they have to pay annual corporate taxes, which actually limits a lot of their wealth accumulation. So they might want to, and they're not saying don't invest corporately, that's not what we're saying, but moving some of that money into insurance where it's tax deferral, it's pre-tax dollars, there's no corporate taxes every year, it is a huge opportunity for them to grow their money through, especially through Advantage Max. Year 10 plus, our numbers are the best in the industry right now. If it's about transferring wealth to the family, and when they take money out of their corporation, there's a massive tax hit. We can use the capital dividend accounts to limit this. And this is where our products, whether it's Advantage Plus or Advantage Max, we can have really good success stories there. Retirement planning. Advantage Max is perfectly designed for that. Business succession plans, estate freezes. This is where our estate planner can really make a difference for you. So no matter where we are, we're going to start small with the basics, and then we're going to move to these kinds of conversations by figuring out where those problems are. So you as an advisor, your job is to be the bridge between figuring out what that problem is and how do we turn this into a solution. And this is where a lot of the times we don't feel like insurance planners anymore. We're problem solvers. We can help these businesses not only give them tools through our member benefits, but solve a lot of these problems. Maybe it's protecting their debt. Maybe it's protecting their profit. Maybe it's lowering their taxes. Maybe it's maintaining control if the wrong family member gets involved. All of these different solutions. Maybe it's providing a payout to the family. We can really make a difference in this business owner market, almost as much as anything else. No matter what the problem is, we should be able to solve a problem through our insurance plans at Foresters. And if the risk is obvious, if we ask the right questions, the solution is going to speak for itself. Like, for example, we have a tool internally, and this is going to eventually end up on our software, where we can compare insurance versus investments. So if you have a corporately owned business plan and they're putting a lot of money into investments, we can show them they took a certain chunk of that money and put it in insurance. How would the numbers stack side by side? And the numbers speak for themselves. This is where the recommendation becomes obvious because of the tax advantages through Advantage Max versus a corporately annual tax. It is huge. So let's give you some case studies to make this a little more practical. So here's Anthony and the DeLucas family, and let's follow their business story. So this is where it becomes real, and we have a bunch of different master classes. We're going to focus on this, but what we're going to show you is how this one conversation can open up to 3 kinds of sales. So today, let's start small. Business loan protection, key person. Master class 2, we're going to look at buy, sell, and retirement planning. That's going to be really, really next level stuff. And then we have CDA, estate plans, estate freezes, all different conversations. So this is where we can really, really help. But that one conversation, look at all the things it can open up. We have 3 separate presentations. So there's so much opportunity in that space. So let's start with stage one. We just talked about this. Identifying the risk. What is their pain point? For this example, let's say it's business loan exposure, meaning that if they get sick, who's going to pay for these loans? So Anthony is the business owner here. He's 40 years old. He is the founder of DeLuca Sons and Trucking. So again, this is an illustrative case. This is an actual case. So by doing our discovery meeting, we're figuring out, okay, Anthony has a really strong business plan. He rents his equipment. He's really growth driven, but he doesn't spend time to do his risk planning. He's not focusing on worst case scenarios. And frankly, this is very common. So their business has done well. They're ready to scale up. They're going to purchase $500,000 more of equipment. So they're going to need a loan. That's a lot of cash at hand. And so, okay, so this should cue in your mind, okay, what about their loan insurance? Like, how are they going to be covered that $500,000 if something happens to Anthony? Is the business set up to do that? And when he's not focused on worst case scenarios, my guess is that's a potential pain point. So there's the risk. It's pretty much clear. Okay, so here's the roadblock. Bank is willing to lend out the money to Anthony, $500,000, but only if he protects it first. So the lender, a lot of the times, requires life insurance, and it has to be equal to the loan amount or sometimes larger. Again, this should not be a setback. This is where the bank has just handed you a long-term sale, and this is your door opener, and you can solve the problem for them. Because anyone who knows about mortgage insurance through the bank, they will know what that kind of product's like. It's a deteriorating value. You're paying the same premium, and if you actually claim, they don't evaluate you at claim. So this is an obvious sale to you. But this is where that door opener is key. We want to become the problem solver. We don't want to go in there and sell them term right away. So again, what are the indicators to look for to see where loan protection is? Like, where are the issues here? One, financial vulnerability. So this is an obvious one here. You can see they have to do a personal guarantee to cover this loan. Other thing to look for, are the loan payments bigger than 10 to 15% of the cash flow? This is where we start to see this is where risk. 3, is there an emergency fund? Like, do they have reserves in case for whatever reason Anthony can't work anymore? And how much of the revenue of the company is tied to Anthony's involvement? He's the founder of the company. He's 40 years old, but if he got sick or passed early, can the company pay for that equipment? A lot of the times it's just no. It's, can the business survive if Anthony is not there? Do they have a contingency plan? What if it's another key employee? Who's the successor? Someone in their 40s, they might not have a child that's old enough to even consider that. So this is where there's clear risks in this business. We're trying to figure out, okay, how can we solve this for Anthony? What's important to him? What bothers him? What keeps him up at night? This is where we can really, really help them from an insurance standpoint. So lender pressure. That's another one. The lender obviously needs an insurance plan to help cover. If Anthony died, how are they going to pay back that $500,000? So all kinds of different things. A lot of times when companies are growing, and this is where you see in point 3 here, expansions require more financing, meaning they need bigger loans, they need money. And sometimes if they have history of credit issues, sometimes it's harder to borrow. So again, lender pressure, big opportunity, big pain point for a lot of people. Sometimes it's structural weakness. And what we mean by that is, A, do they have the history of revenue? Is it seasonal? Is it up and down? Are they consistent with their growth? Is it a new business? All kinds of different questions where insurance and risk planning becomes important. Are they fully reliant on these loans? Do they have any other insurance in place? So again, these are all things to look for when we're trying to figure out what their pain points are. Because if you see more than one risk from that conversation where you're learning about that business, this is where protection becomes really, really important. So again, we're not looking to interrogate them or trying to pry for information. We're trying to just gather the information we can to help solve the problem. So basic questions, again, you can see them. Do you have any loans, equipment, line of credit? Is it personally guaranteed by you or your family? Does your lender require life insurance? Do you have mortgage insurance? If you passed away, like basic things like this. These non-insurance driven questions are good opportunities And you see the cash flow questions. It's the same idea. And this is where we can really, really help them. So again, same thing with family liability. Like what would happen if with the succession planning, lender confidence, if something happened to you, are you going to be able to pay the loan? Will the business be stable? Future planning. That's where we can get into in the second meeting. We start talking about buy-sells, CDA, retirement planning. Again, you don't need to ask every one of these questions in a meeting or go in with a sales list. But you should have an idea of how to pivot that first conversation into the second meeting where these questions can set up clear issues where you can solve a problem for them. And you'll notice whether it's loan structure, cash flow, future planning, lender confidence, all this are really, really good opportunities for you. Okay, so step 2, what's at stake? This is where we can get into the second meeting. And so this is where we can really help them. So once you figure out the pain point, now we're trying to figure out, okay, what are we actually how can we solve the problem? So this is where a lot of people, this is where, again, becoming their trusted partner becomes really important because business owners, I can tell you from working with them, they're super reliant on their accountants. They're so busy trying to grow their business, they don't have a lot of the time to deal with the financial impact of things or taxes. So this is where it's important, where you can form a relationship with their accountant, having relationships where they trust you. Because sometimes accountants can be roadblocks and they could not want to deal with people who are offering tax advice, things of that nature. But this is where it's important to talk to their other professionals, working with them. And again, so let's go back to Anthony. What matters to his family? Again, a lot of these businesses, we talked about the risks when he's lending out money. So again, lenders need certainty. So if one of Anthony's key person dies or got sick, how are they going to pay the loan? This is where we can help them. Loan, cash flow. If one of their key people isn't able to work, do they have enough business to pay the loans or run their business, operate it? And are their families exposed, or is it business? This is where each client, we're going to have different situations where we can help solve the problem. So again, those first conversations where that second meeting becomes important. We're going to show them what's at stake by not solving that problem. It could be a lender issue, it could be a family issue, it could be a cash flow or a revenue issue. So here are the things that are commonly overlooked. And this is important because coverage is commonly aligned to the original loan amount, but sometimes we have to look beyond that. What happens with different lines of credit that go up with different interest rates? So a lot of the line of credit are based on the prime rate, and sometimes that changes. Sometimes your payments will change. Different lenders might have different requirements, and sometimes you have to put up collateral or personal guarantees to help cover the loan. So again, we have to make sure we're not looking at one plan for all. Each different, in this situation for loan protection, we have to look at, does the interest rate fluctuate? Are there different requirements? So again, the goal is pretty clear here. We're protecting their entire exposure. We're not just focusing on that one loan. And sometimes it's a growing amount. This is where we can come back. Step 3, how we can help them. So we go back to Anthony here, and there's clearly a loan issue. And this is where business loan protection can help fix that problem if what happens to Anthony dies or gets sick. So let's focus on the debt side. We can show them through life insurance, we can help repay the loan, we can help protect their cash flow, and we can help maintain their business by getting a plan. So sometimes if it's a growing debt, we want to have insurance that grows with it. So maybe you want to have a permanent plan to help it. Sometimes you might want to overshoot a term plan. But this is what matters to you. This is where we can help create that relationship and show them more than, and once we solve that loan problem, we're just opening up the next step because they're going to have a lot of the issues we talked about, buy-sells, CDA, wealth building. So just starting with that loan, and a lot of business owners have some level of loans. This is what gets you in the door. Once you solve that one problem, this is going to become a very, very valuable, again, starting that first conversation, that relationship, show them you can help, and then it's only going to grow from there. So again, how does this work for Anthony? So Anthony's a sole proprietor. So he'll take out insurance on himself. He pays the premium. The coverage is on him. If the loan lender wants to take over as collateral, they can take it out, meaning that if Anthony died, the bank would get their payment, and then the remaining, if it's a growing policy or there's overshot it on term, the remaining would go out to the beneficiary. So it's a pretty simple thing here where Anthony is a sole proprietor. There's no other partners. It's pretty straightforward. Every one of your business owner clients should have something like this available. It is an absolute great starting point. So really, really good option there. And we're really excited about that. Okay, so let's keep moving this here. So when do we do a collateral assignment? Like, when does it make sense? So again, the reason we would do it is it's very clear. You don't have to worry about the family paying back the bank. It makes sure all the interests from the business to the bank to the family are all aligned. So what would happen here is Anthony would retain control of the coverage. He's still in control. Once it's collaterally assigned, they only owe what's owed. It doesn't grow, and the remaining death benefit is automatically set up to go to the beneficiaries. So once the loan is paid off, and say they get to the point where they don't need to have this, the assignment is released, and the remaining policy would just go all to the family. So this is a great way to put everything together. It protects the lender, it protects the business, and it protects the family. And the structure might be a little bit differently. It depends on the loan. It depends on the setup. It might be term. It might be permanent. This is where each business owner is going to have a different thing. But loan protection is a great way to start with business owners. So again, a lot of people just assume, okay, we do the collateral assignment and they're done. But that's not always it. Like, sometimes you have to be more involved with the lenders and help the business owners. Sometimes you have to help them with annual statements, confirmation letters, show them any policy changes, because the lender is not just a bot. Like, they're very involved in this policy. So again, showing during your regular meetings with the clients, proactive communication, it really helps build your credibility. It's going to open up different conversations, but it's not a set it and forget it kind of thing. You're constantly working with this client to make sure their lenders, when it's collaterally assigned there, are pretty clear. So a lot of times tax considerations, again, anytime we work with a business owner, I've mentioned this before, you bring up taxes and you're just opening up doors. So everyone's always asking, are life insurance premiums or deposits tax deductible? Most are not. But in some portion they can be, and situations they can be paid with pre-tax dollars. Let's talk about situations where a portion of it may be a tax deductible option. So a couple of exact examples here. If the life insurance is assigned as collateral to a restricted institution as part of the loan agreement, the same individual, there is a deductible amount. The deductible amount is based on the lower of the premium paid and the net cost of pure insurance. And again, we have people on staff who would help figure this out. And we prorate that amount to figure out what the percentage of the death benefit would be. So again, our wholesalers, our sales team, we're not tax experts. We have a tax and estate planning team on staff. We have accountants, but we can figure out what this is. But for the most part, high level, most premiums are not tax deductible. There's only rare situations where they are. So again, death benefit treatment, when the insured dies, the loaner gets typically a tax-free payout, and the remaining death benefit is paid out tax-free, depending on whether it's term or permanent. Sometimes if it's permanent, if it's corporately owned, it's based on what the ACB is. That will be the CDA amount. And again, we could spend a whole other presentation. We have another training on this. But one of the best things we do through our PARP product is to minimize taxes, to get the CDA quicker. Both our products can help in this respect. Advantage Plus, really, really good on the CDA side. Advantage Max can do really good things to help save in taxes and maximize that CDA. So again, for certain business owners, that CDA number is going to be massive. It's a way to get money out of their corporations efficiently and help them tax efficiently deal with their taxes. So again, this is where it's important. I've mentioned this a lot. Knowing the coverage, and this is where working with your wholesalers, working with your MGA, knowing the business is really important. There's going to be situations where term makes sense. Sometimes it's a loan, sometimes it's a buy-sell, or sometimes it's based on cash flow. So something where it's a short-term goal, somewhere in 5 to 20 years, or it's restricted based on budget, term is the way to go. You know what that goal is. It's a straightforward. It's not growing in interest, things of that nature. That's term. Permanent is when we're looking at long-term outcomes. So they're going to have a need no matter what. So this is where, and then especially with the growing needs, our par products are very valuable. Our whole life is really, really valuable to that. You still have the ability to do the optional riders, the waiver of premiums if they become disabled, add in critical illness coverage. But for a lot of the loans, we're going to look at term and some permanent. But when we get into the CDA, the tax solving, the wealth problems, the fun part of this, the permanent sales you're going to be able to do with business owners is massive. And so some of the Canadian small business financing loans, they actually require permanent solution because they know they're going to get the money back. Term is more like cable. You can cancel it at any time. Different. Okay, so when you're kind of coming across these cases, before we wrap up and get to questions, we want to show you some underwriting considerations to consider. So again, they're going to want to see, is there a clear need here? What's the loan amount? What's the purpose of this? Are they buying equipment? Think of Anthony's. Who's guaranteeing the loan? If you have a $500,000 loan and you're asking for $20 million of insurance, our underwriters might say, I don't really understand this. Is the coverage amount reasonable? And when you get into different kinds of situations like buy-sell or collateral assignment, is the setup appropriate? So again, it might be something you want to do pre-underwriting with us, or you might want to ask your wholesaler just ahead of time. If you have questions, you want to make sure you're not going to get held up in financial underwriting, we can always pre-underwrite it and double check for you. So if you're focused purely on the loan side of it, let's talk about a few things you might want to consider. Cover letters. We're doing that all the time. You want to tell the story of why they want this coverage and why they need it. Sometimes they might need financial statements depending on the size of the loan. Otherwise, it'll just be normal medical. But if the risk is clear and the cover letter clearly outlines what they need is, this will actually move pretty quickly. And we're seeing a lot of good cover letters. It's pretty easy and it just explains why they're getting this coverage for their business. So again, let's come back to Anthony's example. He has that $500,000 loan. He needs to do it as collateral assignment. He's getting a term 10 for $500,000, a 40-year-old. We're looking under $30 a month. Okay, that's pretty low. You might want to add some CI to him because he has some issues as the sole proprietor. We get a $50,000 Live Well Plus. You get these two plans. We're looking under $60 a month, and you just got in the door with Anthony. Because when he starts looking at his business coverage or his corporation, you're going to be looking at a lot bigger premiums. But again, just focusing on this small thing, getting you in the door, solving that loan problem, $60 a month. We're helping the bank. We're helping protect Anthony's family. And most importantly, you're getting in the door for the next conversation. That brings it all together. So again, stage 2. We're looking at identifying the risk. And so I'm going to take a break for a minute and just open the question panel. So is there anything in there? Have we answered most of this? It looks like most of this has been answered. Okay. So again, we've been going for 55 minutes. So we're going to do our best to kind of stay on schedule here. But step 2 here, we're going to be looking at the growth and the risk. So we're going to be on here talking about the next thing, but when we're looking at this stage, we're really looking at things beyond bank loans, and this will be in a different presentation. We're looking at identifying the risk, and what are we figuring out? We're looking at the assets of the business. What would happen if somebody lost a key employee or lost a truck, things of that nature. So we're going to be looking at key person planning, things of that nature. And again, that will be on Masterclass 2. We're going to be really focusing on how to do that level of presentation. So who's a key person? How do we help them? Again, once we do that loan situation, we're on to the next section there. So who can be key people? It can be CEOs, it can be owners, it can be key employees, IT managers, all kinds of situations there. So again, I'm going to jump through this here and show you some different things here, but we've gone through all that. Okay, so here's an example. We'll quickly wrap this up here. Anthony has 4 critical team members. Anthony, Robert, Stephanie, Hector. There are all kinds of situations where Robert could be a key person, Stephanie can be a key person. There might be buy-sells on different people if they're partners. These are all kinds of different situations, and that will be in our next masterclass to show you how we can work in the key person market. Huge opportunity to do business at Foresters. So let's wrap this up here. Okay, so here's what we learned today. How to ask the questions, how to get in the door. How to identify the early risks of family businesses. So this is where, again, we're not selling a product. We're building trust with door openers, having the right conversation. And then the three-pronged idea here. Identify the risk, what's at stake, and how insurance can help. So this is where we use that DeLuca case study in number 1 about the loan protection as a larger strategy, and then we're going to naturally transition. Step 2, are there key people? And if there's not, we're then looking at all kinds of different plans. But again, every one of your business owners is going to have pain points, and we're going to be able to solve them. So a great way to get in is that key person or that business. But if right away you know taxes are there, we don't need to always just focus on loan protection. But it's a great way to just do a small thing and then open up the next thing. But again, if you go in there and they're trying to get money for their families, well, we're going to be able to help you. So again, important, use that 3-step model and use your resources, your MGAs, your wholesalers, your tax team here at Foresters, our member benefits. We are here to help. Again, big takeaway today, and I say this with all my presentations I'm doing lately. When we sell par, we're trying to get into the juvenile or the business owner market. We're not about risk only. We're not about predicting the worst. We're about solving problems and making sure their business. We don't need to use jargon. We don't need to overload them with information. That one conversation can lead to an advisor relationship that goes years. And for you, it can lead to multiple policies and multiple sales. So I hope everyone took away today the framework we want you to work in. So you can identify early risks. You can trust facts. You can identify yourself as that key advisor and show them you're not there to sell a product. And Foresters, whether it's Term or Advantage Max or Advantage Plus, we're here to help you grow your business. So again, we jumped through that buy-sell pretty quick and through some of the things that we're going to do with key people. The next 2 master classes are going to focus on the next area you want to grow in this. Masterclass 2, buy-sell. Masterclass 3, estate planning, CDA, the really fun stuff through par products. So as the businesses grow from where Anthony is to where you can get to next, you're going to have all kinds of different conversations here to really get into this market. So we're now at the hour mark. Thank you all for joining. I believe all the questions have been answered, so